Hey, good morning, good afternoon, good evening, everybody. How's it going out there? Frank Spicer, CEO of Metafied, with you with these X Spaces. We also have Keyboard Yeti and our co-founder Matt Cross. Today we're going to be talking about the Genius Act, the Clarity Act, and sort of what that means for crypto in general. So, how's it going out there, everybody? Also, the markets today summary. You have Bitcoin sitting at 119,000 ish. You have ETH flirting with 3,700. So things are pretty active in the markets today. Um, just want to say, what's up, Matt? How you feeling today?
Yo, doing pretty good today. It's a nice Tuesday. Today's my girlfriend's birthday, so I'll be celebrating at dinner tonight. Just feeling good about the markets today. Last week we crushed it. Gonna crush it again this week, so spirits are high.
Great, great. How you doing on the other side of the world, Yeti?
Yeah, real good, man. It's, happy birthday to your girlfriend there, Matt.
Yeah, yeah.
Thank
Congratulations. So,
Yeah.
yeah, another trip around the sun. So, you know, there's a lot to talk about here, right? Last Friday I was on Bloomberg just as the Genius Act was getting signed into law. We we immediately followed the president's press conference. I think because it went a little bit over. Also because obviously we're one of the most important voices in crypto. Uh, and I think it what happened last Friday with the signing of that law is essentially two things. The crypto as we know it is now mainstreamed, and that has a whole bunch of other implications. What also happened is the dollar sort of becomes the de facto underlying value peg for everything in the industry. Not that it already wasn't through USDT, but now it becomes sort of formally introduced, and there's a lot of innovation that can happen around DeFi products that tie back to those stable tokens. And what we mean by stable tokens, for anybody that's new, is these are tokens that act as a proxy for existing, uh, currencies. In this case, the dollar. You have USDC and USDT, which are the two main ones, and those are sort of tied to the US dollar. Now, the law has a few key points to it. So before we get into the discussion, I just want to refresh everybody's memory on what that means. And so with this the Genius Act, stable tokens have to be fully backed 1-to-1 by US dollars, treasury securities, or equivalent liquid assets. And they can only be issued by banks, OCC chartered non-banks, and licensed state trust companies, and then they have to have federal oversight. So with that comes a requirement that they have to report and do public audits monthly, and that's, I think, Matt, we're going to get into that in a second. And then independent annual audits are required. The other thing that's a little bit, it on the surface doesn't seem to make a lot of sense to us in the Web3 space, but will make sense in the broader ecosystem of traditional finance, is the stable tokens cannot pay interest. So they don't want a stable token functioning exactly as a US Treasury, and they cannot suggest that the US guarantees it. So if a stable token wrecks, it's not like the US government's going to step in and bail it out. Um, so it's a sort of cooperation of regulation between the state and federal legal systems. And then the covered entities must follow the Bank Secrecy Act and anti-money laundering rules, which maybe we don't love that, right? So it also, you can't market stable tokens to do something they're not supposed to do. You can't imply something that you can't prove in an audit. And in essence, it sort of takes dollars and bridges them out to a whole new class of buyers and people to use them. So let's see, we have Peyton in the audience there. I invited you to speak. See if you can accept that, man, if you got it. But we're gonna bring him up here, and he's gonna be speaking with us today. also giving us his thoughts. So, Matt, what's your initial thoughts on this legislation?
I mean, I think it's about time that we have some type of, regulated framework to bring new people into crypto. Again, makes founders a lot more comfortable. It legitimizes this for institutions, and it's also reasserting America financial leadership. And I think this is, a great change for us and positioning us to the rest of the world where people could, issue debt into these foreign markets. And also, it gives people a safe asset to hold when they're worried about inflation. So, hey, if your currency is inflating 30% in a year, hold USDC and maintain your value, because the US dollar is still the most powerful thing around the rest of the world. And for us, it's great for our economy. So, I'm really excited to see how this continues to roll out. But I would say the rest of the financial industry is taking crypto seriously this time around.
Yeah, for sure. And how do we feel about the monthly and annual audits required for, say, USDT?
For USDT, I think that's going to be interesting because, USDT hasn't really made their audits public. They probably only have, I think, one day out of the year where they allow someone to look at their books. I've heard things that they're going to have, USDT still be unaudited, and then they're going to launch like an audited stable coin called like USD zero, or I can't remember the exact name of it. So supposedly they're going to try to have two frameworks so that they can still, work with some of the law and then also have this wild, wild west out there.
Yeah. So now that we got Peyton up here, what do you think about this?
Hey, Frank, thanks for having me. Matt, thanks for having me. Great to be here again. Um, Overall, sentiment's extremely bullish. Um, Biggest reason being, despite all of the audits and everything else, what this gives true innovators and true builders is an immediate, straightforward way to comply. And the moment you have that, right, you're now greenlit across the rest of the economy. I can't tell you how many times I've met with compelling products that have really true innovative tech and innovative processes, but they're blocked because what happens is that the users of that say, I want to engage with you, but I can't. And all that's gone now. One thing I'm super bullish on is actually the Wyoming stable token, because it's a state-backed stable token. So by default, if you're using that, then you are complying with the state-backed smart contract. As a result, literally no one can argue with your product or service. It's legitimate in the market, and you allow the free market to compete. There's some elements in the bill that I think should be improved. However, this is such a massive milestone. I expect this to do absolutely fantastic things for the American economy.
Yeah, I think what happened with the passage of this bill, in terms of its impact on the overall economy, is severely under-examined right now, and that's why, like, this the space that we're having here, I think we're going to talk about a few things that are going to surprise some folks, right? The the requirement that the stable tokens have to be one-to-one backed, and by the way, the compliance deadline for this is July 28th, 2028. So they have until then to comply, or July 18th, 2028. Yeah, July 18th, 2020 to comply. So USD has some time to get its house. USDT has some time to get its house in order. But there's a few implications with regards to the Federal Reserve, the Treasury markets, sanctions, and the like. So the way I read it, and I spent a lot of time going over the actual text of the bill. I think one unintended consequence, or maybe possibly intended by some folks, is economic sanctions now are a lot harder to enforce, because what you can do is you can have stable tokens by parties set up transactions, and as long as they perform it sort of in the stable token, or a token tied to the stable token, uh, you can transact in dollars that are auditably redeemable for dollars and know that they're backed. So that's maybe a little bit of a challenge for the politicians, State Department, everybody working out sanctions with other countries. But what it does do is it takes all that volume and shifts it to dollars. So all of these illicit transactions are going to be happening in dollars, which means there's more buyers for dollars, and that in turn puts pricing pressure on the issuance and treasuries markets, right? And I think that's sort of maybe hasn't been fully worked out with a lot of folks to understand the implications of that. But we're talking trillions of dollars of volume in dollars that weren't present on the U.S. books, now made possible by this. Do you see it anywhere like that, Peyton?
Yeah. What's I find interesting, Frank, is before, as I was speaking with entrepreneurs all around the world, they were trying to set up a system like this for their specific geography. And what they were doing is they were trying to find a family office group who could uh, get the proper corresponding bank in order to basically like issue a localized stable token, and then take treasury markets that were, sometimes closing at 11 a.m. local time and open 3 days a week, to then offering 24/7, 365 service. And you just had the US federal government say, you know what, we're going to do that for the entire world. Keep in mind, the United States is only 18% of the global economy. So what we just said is we're going to open up our our treasury market to 5 times the size, closer to 6 times the size of our entire economy. The implications of this are absolutely insane. Um, this is very, very large, and that's just direct access that we can measure. That's not even considering the demand that's going to be generated due to debt products. So the RWA space in about 6 months is likely to become the hottest space in arguably all of the global economy, contingent with AI.
Yep. Also, I don't think there's any coincidence that David Sachs, who was at the podium for the announcement of this, is also not just the crypto czar or whatever you want to call it. That's such a corny thing to call people in a free and open economy, but he's also the AI czar. And for everybody out there, by the way, who we, if we didn't give Peyton his proper introductions, that's my fault here. Peyton is our lead investor from the seed round. He's been with us, from very early on. He helped actually plan the development of Surge, and essentially the spot and range games from a poker room in Charleston, South Carolina, with Big Worm and with Matt. And he's seen it from the very beginning. And I want to make note that Peyton is a venture investor, and we saw firsthand how the banking system impacts the ability for investors to sort of do what they would like to do for some sort of arbitrary reasonings of the banking system where somebody makes a subjective call. All that kind of goes away, right? Like I think as an investor, you just sort of said you don't have to wait till 8 a.m. on a Monday to get a deal done now, right? Like you can actually compete for a deal over the weekend, transfer it in seconds, and be in a deal now, right? Like that's probably something that's going to change your business right away, right?
Yeah, and on a broader note here, what this bill does is it makes velocity of money instantaneous, as fast as an internet connection can move. Which the concept of velocity of money is, kind of a right curve economic term, but all that means is you can spend and send money faster, right? So we're all crypto people. A good analogy is the casino. If someone's playing blackjack and they're on a hot run, and then they immediately go from blackjack to the roulette table to baccarat, then back to blackjack, right? Like it's seen as they're on a run, they're going fast, they're tipping every dealer along the way. So what's the dealer doing? The dealer's trying to get more people to play around this guy, right? Because he's on a run, he's moving quick. Same thing happens in an economy. When you have an industry that's able to move a bunch of money really quick, just simply because commerce is being generated, um, other groups and businesses around them are taking place in that commerce doing the same thing. So in the same time frame, you have dollars transfer 3, 4, 5, 6 times as fast. As a result, it's greater economic output and prosperity for all involved. So unlike a casino where the house always wins, in this case, you are the house, so you are also winning. Um, and that has really, really profound implications whenever you look at debt markets, because the bulk of debt markets that exist is just to get liquidity, so that way you can move capital from point A to point B, and you can get um, different parts of your portfolio to settle and transfer. And uh, as a result, like, the next big move is going to be larger financial institutions setting up these types of settlement systems, and as well as individual entrepreneurs who can act as middleware services for these type of settlement systems. And I fully expect those to do exceptionally well over the next year to 18 months.
So to summarize kind of what the points that you've just made, we essentially made the credit markets and the velocity of money around the transference of dollars, we took it from potentially 18% of the global economy to now it can back all of the global economy, and 5 to 6x the size of that. What we also did in order to speed up the velocity of money is the banking and credit markets. The window for them is now not 8 hours on weekdays; it's 24/7. So it's 4 to 5 times larger than it was prior. Is that accurate?
We made it 24/7, 365, and then we also made it to where, like, as an example, I did a debt deal once, and this wasn't like a large financial transaction from the perspective of a bank. We were literally settling 3 car loans, right? And it's kind of a niche deal. That deal took 120 days in order to get done, which is absolutely ridiculous. But it took that long because there was all these different types of review. Once you had these different types of review take place, you then had to have multiple sign off. It's this hassle of trying to flag people down just to get them to review your paperwork, right? And you're battling for attention at that juncture. And then if one person is even just out of office because they're sick, or maybe because they're on vacation or whatever else, all of a sudden the Fed can change rates and everything's repriced, and then you got to start back from square one all over again. All of that crap is out the window, and I have a deal in front of you right now. Let's settle this today, if not within the hour. That is massive.
Yeah, and compound that scenario tens of thousands of times a day across the globe, and now you can start to understand the volume of transactions that are going through here. So I'm going to pause that for a second because I want to tie that into the discussion about the Fed, and I'm going to direct my first question at Matt here. But what it seems like the U.S. has just done is the way new money makes it into the market is no longer the only trick in the bag of the sort of the US dollar is to inflate the money supply through the Federal Reserve. Now what you can do is you have all this revenue coming back to the government in terms of people paying on transactions of the volume of stable tokens, right? And that's all going to sort of tie back in and repatriate that to the United States. But it seems like we took power away from the Fed with this move, because instead of a preference of inflation, we've moved to a preference of sharing the volume and sort of the revenue coming back from the volume there in all the markets where stable tokens are backing these deals. Do you think, Matt, that this represents a threat to the Fed, or do you think it's business as usual?
I definitely do think it represents, some type of threat to the Fed. Also, just the overall banking system. A lot of the time when banks are doing, settlement between each other, it would take a week, and in that week, they would loan money overnight to various banks for these quick, rates. And right now, you have instant remittances, and that takes away a portion of their business. Yes, it does reduce fraud, but I think a lot of the banks prior to this have been very slow to adopt that because, they're scared of it impacting their current business. And I think, overall now we can have different strategies. We don't need to focus, right, like on inflating the money supply. We can focus on more of a global approach, getting more of our, dollars out into foreign markets. And I think this is just a great opportunity to create better incentives in the market instead of, hurting the people at the end of the day. You can start to figure out ways to capture money faster and actually build, more concisely together. So I think, the Fed is definitely worried about this, but I think, a lot of their existing plans have kind of, topped off where people are sick and tired of the current, rates. They don't want to see it impacting their dollar anymore. And they kind of took as much as they could. And now this is one of the only solutions they have to try to make things better. So I'm expecting a much stronger US economy from this. And the purchasing power of the dollar is just going to continue to go up after this. And I think it's, about time that we're on the other side of the curve now.
Yeah. So no, we're no longer sort of just trying to dilute the purchasing power of the dollar in order to do business. And this is as manufacturing is returning to the United States and capital's coming back in. I'm going to put Peyton on the spot here, but I know we've talked about this before, so it's not a total curveball. But where do you see this impacting the crypto markets, and where do you see the opportunity? You mentioned real world assets. What other things do you see in terms of like innovation where people can focus their research and stuff like that?
Yeah, sure. So, with respect to where's the trade, where's the deal, right? Like, there's always a trade, there's always a deal to be done. It's just a matter of where to look. And I'm going to separate that into two areas, right? You have the public markets, like the stock market, that's listed that you see on Nasdaq, um, the New York Stock Exchange, and Pink Sheets, and then you got the private markets, and the crypto tokens, right? The beautiful thing here is that the general trend is stable coin and stable token, which those are actually two separate things, just became the sexiest word on the street, right? Every single company that saw the Circle IPO just realized they can add how many billions to their bottom line by, I'm sorry, not bottom line, but to their market cap just by announcing that they're considering integrating stablecoin into their tech stack. What the U.S. government just did is they said, hey guys, we're going to make it legal for all you guys to create private money as long as you just have government debt that's backing it. We don't really care. Just like make government debt that's backing it and don't be too much of a scam. And you can create private money just like a bank. That's functionally what just happened. The implications of that globally are going to be massive. And so the most actionable item right now on where's the trade for retail investors who only have access to public markets and crypto markets is going to be kind of the same thing that I mentioned before. Your tier ones that are touching stablecoins and RWA. So MakerDAO already looked nice before. They're looking really good now. I mean, for people to consider, right? Like they've got, I believe, last time I checked, it's been a little while, but they had roughly 63 billion in float. To think that they're not going to take that balance sheet and utilize it against um, this legislation is insane. There's other smaller projects, and I'm going to do a quick plug for a friend of mine. His project's called Infinify. His goal is to replace bankers and literally be better than banks. He's created a nice matching engine to allow that to be the case, but they're releasing a governance token late Q4, maybe Q1 of this year. If y'all want some alpha, y'all want a scoop, go use this system. It boosts yield on whatever stable token that you have just by doing duration matching. And he straight up plans on airdropping all of his users who use his system. I fully expect this to do well. And in full disclosure, we are investors. So if you want an immediate scoop, there's two names and other groups that are associated with both the movement of money as well as the ability to mint the stablecoin and manage the technology behind that is where I expect to be the absolute hottest in private markets. And as far as public markets are concerned, Circle's way overvalued, in my opinion, at this stage. However, I would expect other larger players to jump in on this bandwagon. Like Visa and MasterCard are totally going to issue their own stablecoin and their own stable token, and they're going to push it onto their network. If it's accepted or not, or if they can innovate fast enough, we will see. But that's bound to happen. Another thing that I expect here is for any public gaming company to then start offering some type of stablecoin within their ecosystem. Because the big thing that this just unlocked here is, how do we bring money into gaming and do it in a legal way? Publishers before ran into the dichotomy of, well, how can we control people's money but also control the game? And now what happened is you say, look, we can allow the money to work and function as long as it's working in tandem with what's in the Genius Act. And so, what you're going to see is there might be one or two publishers that try and go on this endeavor, but really there's going to be a third party that comes together either with a consortium of publishers or just as an independent third party that says, this is how we're going to allow money to be a part of our game. So a good example of this is like, I don't know if anyone here plays Call of Duty or Super Smash Bros.
Yes, we do.
Yeah, exactly. And like, it's very real within the next like year and a half that one of those entities is going to allow you to, get $10 every time you get a headshot, right? And other associated gaming economics, whether it be tournament style or just like PvP, all of that just got unlocked with this bill. So we're going to see very significant innovation there, and I fully expect some of these publicly listed companies to jump in on this bandwagon. And the reason being is because if you're a gaming user, right, like your value to the company, it really comes out to be between $5 and $12 over the lifetime of you playing that game. Now you add a money Lego to it, and your value to that company, like literally 5 to 10 X's from $8 to $12 to as much as like $150, $200 out of the lifetime of you playing that game. Every single business that retains attention in gaming is literally going to be forced by their shareholders to consider this as a viable option.
So that's an excellent point, and you sort of touched on it. So this is going to impact publicly traded companies for sure, who are then going through the Clarity Act that's now in the Senate for approval that was passed on July 17th. Those real world assets now also through that bill, once it becomes a law, will have a pathway to tokenize themselves in a way that's compliant with all securities laws in the US, and they'll understand who regulates them. So if you're looking for these trades, you have to pay attention to everything that was just said, but also look at which of those companies through the public markets are now going to be tokenized, and which one of those do a good job of getting acceptance for the projects that they're doing. And that coming into crypto, in addition to the all the volume in the credit markets and all the volume in dollars, now the equities publicly traded are going to have an avenue to tie more closely into payment systems and ways to get rewarded for value. And I think that in itself is a show, an episode all by itself. So I don't want to leave a cliffhanger, but once the Clarity Act gets passed, we need to go through all of those things. And I think that's going to be where the trades for everybody are, because we can talk about who we think's doing a great job and who stands a really good shot at making those things work. I'll give you a hint. Metafide's one of them. And we can start to understand, how this impacts the trades and where you can actually share the upside. So we're sort of up against our time here. I want to thank Peyton for jumping in. That was really thoughtful, and I hope everybody heard what was said. I think we'll leave the last word to Yeti, who didn't get a word in edgewise. So Yeti, what do you think from somebody outside the United States, like looking at what's going on? What does this look like to you? Do you think it's a good thing, and do you think this is good for crypto?
Oh man, I was just saying in the Discord how glad I was that you hadn't brought me into the technicals of the conversation. but yeah, this question I can answer. To me, like, Australia is really lagging behind America now on it. Like, it's obviously going to be great for America and great for crypto as well. Like, provides clarity, for want of a better word, to builders and legal framework for us to go ahead. And I think that other countries will have to follow it as well. Like, we'll have to bring in legislation where kind of the hand of other countries will be forced now into doing the same thing. I think otherwise they risk falling behind. It's a shame we're ending. I would have loved to hear how it would have affected, how you think, if you can just have a quick touch on how it will affect Metafide specifically, or are we too late?
No, I think that there's quite a bit that one, we've actually planned for all this, which is amazing. Literally back in that planning session in Charleston when we started this game, a month or two before that, Peyton and I were talking, and he like, to his credit, he's the first investor we spoke to where we said, look, this is what we want to do. And he thought about it and he's like, yeah, just do it. Like, don't ask permission, ask for forgiveness, just go do it. So, I want to publicly thank Peyton for that. And we just started running at this with the blessing of our investors. And turns out we were right. So there's a whole bunch we could take a victory lap and talk about how it works, but mainly what it's doing for our users. But I think that's a great topic of discussion for Thursday. So we'll say Thursday, 4 p.m. Eastern time. Want to thank everybody here who made it this one. I want to thank Matt, Peyton, Yeti, and everybody out there in the audience. Find us on Discord, discord.gg/FIDE-token. Find us on YouTube at Metafide, and find us on X at FIDE_AI. Make sure if you're not already on the wait list, surge.metafide.io. Just go there, put your email in there, make sure that we can reach you when it's time to push out, which is coming soon. And we're going to start prioritizing access to our games through a few mechanisms that we're going to make public there. So make sure you're tied in, make sure you're following us. You don't want to miss this, because we've planned for this, and now's the time for us to reap the rewards. So a little bit of a hint for what we're going to be talking about on Thursday, but we're going to help everybody get through this with us. We're all going to make it, at least us here in the Metafide community. Our friends out there in the Doge space, want to thank you guys for supporting us so far. And we have a whole lot to talk about. So thanks everybody for today. and we'll see you on the next one. Appreciate it. Have a good week until Thursday. See you then.
Metafight is the only AI-powered Bitcoin prediction game where traders compete in real time to forecast BTC's price in a fast 1 to 5 minute round. Test your skills against global players. Take on 1x risk with the ability to win multiplied payouts and prize pots. The more accurate and early, the better the outcome. Pre-register now for early access to generational wealth.